friends. This is Daddy Day Trader with a good morning update for you. It's Tuesday morning, about 5:20. I found that trying to do a video after my morning trading and before my other gig has been challenging, so I thought I would. And I've also found that with trading these larger cap stocks, that the pre-market trading isn't as volatile, and there's like very little volume for a lot of these stocks. I think yesterday I was trading SMCI on the 1 minute pre-market, and it had like 200 shares like per bar. So like, don't really want to be involved in that because that's too low volume, and it just kind of hops around without much kind of directional support. So why not, do a video here and there when I can. So right now we're looking at our leading gapper on my chart is Zoom, and then there's VKTX, which is up 80%, and that's like a $4 billion market cap. So I think they had some sort of weight loss drug that is proving to be effective. So that'll be my main watch. So right now it's at $70. It was up to 87 uh, pre-market. So look for basically like a dip and rip at the open, which has been kind of the theme for these leading large cap gappers. Like yesterday was MU, and that did like a perfect dip down to $89 and then rip up to 91 or $2. So I'll buy like 20 or 30 shares, and while it's after the open, and see if it dips and then buy it there. Same with Zoom. I'll keep an eye on that one, but that one's sort of fading right now. Like it was at 72, now it's at 68, so I'm not sure I trust that one. That one could just fade. Sort of been like a difficult stock because it was up at like $450 and now it's at 70. I'm not sure they're super innovative right now, and I guess everyone's kind of taken their idea and made it their own. So I don't know if that one will be like a dip and rip at the open, but we'll keep an eye on it. Yesterday, let's see, got myself into a trade on SMCI as it was going down, and then what I did was I bought it as it was showing a small sign of recovery, like a bounce back. But what happened was it did like a small bounce and then just like cratered even more. So I think I bought it at like 865, and it went down all the way to like 830. And I had, as it was getting down towards that 830, I bought a few more shares to sort of average down on that one, because that one does seem to recover every day. Except for that one day I bought it and lost $200, but it then actually did recover a few days later. So I rode that one for a while, and I think I was down like $600, or no, I was down $300 at one point on it because it was down so much per share. But it didn't continue to break down, and I held it, and then it went back up to like 860. So I had a cost basis like 853. So I made some money on that one, but it was kind of a stressful hold for the morning, and I don't want it, really want to be there. So what I was thinking about, like, why did I get into that trade? And it was because it had like decrease in value quite a bit on like a red candle, and then it was showing like a signs of reversal. But what I didn't look at was like some other indicators like RSI and MACD, and seeing how those were treating it, because I think those were still going down and not showing any signs of recovery even on the 1 minute. So I wrote a post-it note to myself that says, before you buy, look at your indicators, look at RSI, look at MACD, wait for because I've done this on SMCI multiple times and seem to be catching these nasty flushes. Wait for the reversal, which is when it goes red to green, but wait for a reversal that actually is a reversal, not just like a fake out. So I made that post-it note to myself to kind of remind myself to be like, okay, it's gone down, it's tempting. Now let's review our other indicators to make sure that it's legitimate and not just a fake out to get people to buy in so it can crash more. And I'm hoping, because I'm just a little too early to the party, right? Like if I had waited another minute, like it would have crashed more. I could have, and then I would have been poised to buy it at 8:30. Instead of already having shares, I would have been opening a new position, and then it goes up to 860, then 880 that day or something like that. I mean, pre-market, it's already been up to 880. So I would have made it, maybe had I traded it properly at 8:30, and I bought 5 shares or whatever, that's, $100 or something like that. So just being smarter about my entry on those ones that are dipping and waiting for that true reversal versus getting in when it's like, oh, that was a huge dip. Like it can dip more. It can dip more. So, and then also like cutting it sooner. So I think that one was just so fast. I was like, oh, I'm already down $100. Then what do I do? But you buy 5 shares and it goes down $15. That's like, wow, okay, that's a big drop. And so, anyways, so that happened. Wasn't super proud of it. Could have lost a lot of money had it continued to downtrend. I was down $300 at one point, feeling kind of silly and stupid, and somewhat a little triggered, like on that one, because that was a big kind of drop. And with SMCI, it's like can buck the trend a little bit. Like I was looking at SPY and Nvidia, sort of like sympathy to SMCI, and it was sort of going against those as it was dropping. So I was sort of like upset that when I was, I mean, I shouldn't be upset, but I was, right? It's just human nature. So we'll see about today and how it acts today, because I mean this thing has like a good huge range every day, and it's got big spreads. But it moves good, and it sort of moves when it does get going. It moves in a good direction. So, anyways, I've always got that one on watch, at least for now, till the AI stuff dies down. Nvidia doesn't quite move as much. That would probably be like a better long-term buy, but it doesn't quite have the same volatility. So I haven't been trading that one as much as SMCI. Let's see. I'm gonna watch Unity to see what that one does. It's down 13%, but I'm wondering if it's going to go down more. May short that one if it's showing like a consistent downtrend. And then I know HOLO has kind of been on everyone's radar quite a bit. So yesterday I bought some shares of that one, and it went up. I was buying it in a breakout, sort of like it was at like 1250. It was showing signs of strength and volume, so I bought in, and then it went up to like $13, $13.50, and of course then it crashed down to like $11 or whatever. So I made like $80 on that one. So yesterday, all in all, I was up $107, and I trimmed out 2 of my long-term holds that were losers. So NYCB is that New York bank that had like a huge sell-off, and then 3M was kind of just like static, so stuck at 91 or 92, so I cut that one. So yesterday's total gain was $88, and it put me green for the year, like $50. So we're at the end of February, and I'm just now getting green on the year. I was green last 2 weeks ago, or last week I think I was green, and then I had that bad day of like minus $300, 350 or something. So today we're gonna not trade pre-market unless there's something showing like significant movement, but I doubt that's gonna happen. I have also noticed that like if you get in before the market open, there it can have a pretty big dip, and sometimes the dip doesn't recover enough to get back up to where it was when the day started. So don't get yourself into that. Review your post-it here. That's what I'm going to do is review my post-it that says before you buy, check your indicators. Make sure those are also, because like my eyes are like, oh, there's a green candle, it's recovering, boom, buy. Whereas what I need to do is say, okay, there's a green candle. Now look down at like your 17 reversal indicators to see are they confirming it? Because I like MACD from like a sort of like a swing. Is it showing a recovery? Is MACD improving? I like it. I mean, it's not foolproof or flawless in any way, and it can certainly. I think it means more maybe the large caps than the small caps, but I think it shows a trend, and I like that. So, I need to be better about checking those trends. Sometimes I'm just trading like with just the candles. And I think that's a little short-sighted on my part because just the candles doesn't necessarily give you the whole picture for what I'm trying to do. And especially if you're jumping on like a 1-minute candle, because those are definitely going to give you false like promises probably. So today we're going to be watching Zoom. We're going to be watching VKTX. Bitcoin can't believe it, is at 56,000 or something. It's probably because of those ETFs opened up. So I don't know if that's a trend that's going to continue, but obviously coin is doing well. And I'll keep SMCI and NVIDIA on my charts, and Unity. And then Palo Alto Networks has had a huge recovery. That was one that's done well since its drop off. So keep an eye on that one. I'll just keep an eye on SPY just to see which way it's trending. Right now it's kind of a little bit up, but not much. And I think my main watch at the open is going to be VKTX for an open range breakout or whatever they call that. I think it is. So I would expect it's up 80%, 75%. That's pretty big for a stock at 4 billion. So I guess it was probably like a small cap earlier today, but we'll see. And because that one could go up quite a bit, but we'll make sure we look for our indicators on the if it does drop at the open, that there's an actual reversal. And it's surprising how quick they happen. It's within a minute. Like yesterday, MU was reversed in the same minute. So, and then it seems like after that, the volatility is totally decreased. So it's that first 5 minutes where you can catch those opening ranges, which I like, which is kind of cool. And they're not nearly as volatile as the like micro caps. So, and they certainly don't halt down. Don't see that very often. So that's nice. All right. I'm just looking at my watch list here. Okay. All right, guys. So that's going to be the plan. Check your indicators. Don't just jump in on a 1-minute green candle reversal after a big drop. especially on these stocks that have proven to bite you if you do. Wait for a reclaim of a 5 or at least a 5 minute candle potentially. So yeah, so just be smarter. I was thinking about that yesterday. Like, it's not a smart trade to do that. So I need to be better about. Well, there's like not. It wasn't smart to get in it, and it wasn't smart to not cut it sooner. So, two stupid things. Which, you build bad habits doing that, and I did because then it went back up, and I made money on it. But at the same time, like that doesn't work long term. So I don't know if I'd be able to cut like a crappy stock that I bought into, which hopefully I won't do because I'm building bad habits on like the big ones like SMCI, which do have a better chance of recovering than say Lunar or whatever those micro caps are. So, all right, guys, this has been a Daddy Day Trader morning update. I'm gonna focus in on the market, and we'll be back. Thanks, guys. Bye.